Welcome, ladies and gentlemen, to Commodity TV here at the PDAC in Toronto. And it's an honor and pleasure to be here again in 2024 and to be a media partner of this fabulous event. And my first interview partner is well-known Ryan King from Calibre Mining. You remember the really successful gold producer out of Nicaragua, US, and now also in Canada. Congratulations, Ryan.
Well, thank you. No, it's very exciting to close that deal and get started advancing the Valentine Gold project.
Exactly. Yeah, you are in Newfoundland there now. And I think I saw in your presentation 195,000 ounces is the plan starting next year.
Correct,
that would lift the company to a new niveau, I would say.
Well, we would have one of the most significant growth profiles amongst all of our peers. Right now, based on analyst consensus, it would be about a 65% growth profile from where we're at now to 400 to 500,000 ounces a year of production with the inclusion of the Valentine project. So very exciting time for the company.
Absolutely. Yeah, so you took over Marathon Gold. This is the deal is closed, I think, now completely. Production growth profile. Those are words we love. So let's stick shortly one step back. Nicaragua. What's the plan this year? Because I saw you had fabulous drill results.
Yes.
And it looks like that Limon complex, the whole thing is growing and growing and growing. That's amazing.
Well, yeah, if we step back and we look at Nicaragua for a minute, that's where we started. And that's what allowed us the platform from which to grow from. But Nicaragua, when we started there, we were anticipating 50 to 70,000 ounces a year. Now, because of the inclusion and the evolution of the hub and spoke approach, we've been able to grow at about a 30% compound annually every year. So the first year we produced 130,000 ounces and we've been growing and growing. Last year we produced a record 280,000 ounces of gold. This year we have our sights and we've given guidance to 275,000 to 300,000 ounces of gold. So again, it's another year of growth, but a big year of investment. Reinvesting back into drilling. As you just mentioned, we've had some fantastic drill results, which, and we'll have a resource and reserve update here in the next couple of weeks, talking about what we've done last year, what the resource reserve new numbers look like after the drilling we've done. So we're encouraged by that because if you don't invest, you will not have a sustainable operation going forward. And that's what we've been doing.
Absolutely. And I mean, you have been very successful in the past. It looks like that the future looks extremely bright. So Nicaragua, I think that's a done deal. That's running, that's up and going. The Valentine project next year, you will be, when do you think, commercial production?
Well, we're working through all the details now. So what Calibre is doing is we're re-baselining the project. So we're looking at all the aspects of the capital, the timing. But right now, I would anticipate H1 of 2025 that we'll start to see first gold production and then a ramp up to hopefully commercial production by the second half of the year.
Wow, that would be fast. Fantastic. Well, that's great. And of course, the money, the whole setup is there because you have no debt as far as I know. And you have approximately $100 million in the bank. So that's pretty decent, I would say.
It's a very encouraging place to be. Now, the project, a large open pit mine, it's a big project to take on. We also did take on the debt from Marathon. So Marathon for the Valentine project had a $225 million facility put in place, which we will use. We'll use that, our cash, as well as our operating cash flow to develop the property. But nonetheless, a transformational deal for Calibre going into that mid-tier gold producer status. So really exciting to see the development.
Okay, super. So that means now it's that Nicaragua, Canada, and the US you are in. So those are three, I would still say, fantastic jurisdictions because I think personally Nicaragua is a great setup there. But it's also balancing your risk, which is fantastic. So how is the US running? And because I know that project also quite well. I saw that Gold Rock is also something going on. And you have the Ilipa mine also maybe in the future there.
Yeah, so another jurisdiction, we acquired Fiore Gold a few years back now. And, it's not a huge asset in the portfolio. It'll produce 40 to 45,000 ounces a year. But really how we look at that property is it is a cash flowing exploration opportunity. It's got a large land package, 220 square kilometer land package in the Battle Mountain Eureka Trend, which is a multi-million ounce trend, right? And so since we've taken over ownership of that asset, we have replaced depletion and grown reserves 23%. And you talk about Gold Rock. Gold Rock is an interesting opportunity because it is federally permitted. And we're working through the state permits now, doing some additional technical studies, and we're going to be drilling there this year. I think we've got about a 20 to 25,000 meter drill program between Pan, the operating mine, and Gold Rock, which is only located about 20 kilometers from Pan. So now we're looking at the synergistic opportunities between Pan and Gold Rock to see if we could unlock value that way. So it's not just about what we've got on in Canada right now or Nicaragua, but as you brought up, Nevada, as per the Fraser Institute, is the #1 mining jurisdiction in the world. So we really are balancing the portfolio. And if you take a step back and you look at Calibre as a consolidated company now, 60% of our NAV, 60% of our NAV will be coming from North America, significantly diversifying the portfolio, and we should see a trend to higher valuations because of the jurisdiction.
Absolutely. I see it the same way. I remember also within the Nevada projects, there was one in the state of Washington.
Correct.
Any news on that? I think Gold Eagle is it called?
Correct. Right? Yeah. Well, Gold Eagle is an interesting one. Now, it's got a 2 million ounce measured and indicated resource. Not a lot of people have a 2 million ounce measured and indicated resource. And this is interesting optionality for us. So it is a jurisdiction that has seen significant past production, albeit quite a few years ago. But nonetheless, there is some activity in the area. Kinross is doing a bit of activity in that area. They've got a mill nearby. They've got a mine that was operated. They're both on care and maintenance now. But nonetheless, the 2 million ounce deposit that we have there could provide some optionality in that jurisdiction. So we're not doing too much this year because really our focus is in Canada and ensuring that we develop responsibly the Valentine Gold Project. But nonetheless, there's some interesting stuff happening there.
Okay, super. So let's assume, just hypothetically, forward-looking statement for the regulators, 2025.
Sure.
Valentine is on commercial production. Things are going well in Nicaragua, the US. We can plan maybe 450,000 ounces plus, I would say. Where do you see your AISC going for the whole company? Where would you say maybe we have room to improve? And important as I'm a shareholder, when do we see dividends? 2026?
Well, it's there's a lot to that question. But nonetheless, here let's walk through it, right? So, looking forward, Calibre has grown organically and inorganically through this recent transaction, which is a transformational deal. But stepping back from an AISC, so all-in sustaining cost to produce an ounce of gold perspective, I think that we're going to end up on a consolidated basis somewhere between $1,200 and $1,300 an ounce.
That's okay.
Right? And let's take today's gold price. Today's gold price, let's call it $2,000 an ounce. So that's conservative because we're closer to 21 than we are 2,000.
I think tomorrow we are.
Right. So let's take the high end of our costs. So we're about a $700 per ounce margin on $500,000 ounces of $50 million, right?
Beautiful.
So generating some very good operating cash flow, allowing us to pay down that debt quickly and look to reinvest into the assets. So I don't think we'll have a dividend immediately or our share buyback immediately because we have continuously invested into our assets, and that has driven the largest return on capital invested into the company to allow for the share price appreciation. I'll give you an example. If we look at Nicaragua to start with, we started at a base of 250,000 ounces of reserves. At the end of 2022, we had produced probably 700,000 ounces of gold. But because we reinvested into exploration and mine development, we grew those reserves almost 280% to 1.1 million ounces of gold. And so reinvesting back into finding more or expanding or increasing the confidence is really important. Also, in Canada, we've put out some fantastic drill results, some very exciting drill results at the Valentine project. So I believe that in 2025, we'll have a pretty significant and very robust drill program there. It's multiple kilometers along this very prolific shear zone, and we've only identified resources over 6 kilometers of that shear. And you look at what we just put out, we put out 46 grams per ton gold over 5 meters, 17 over 7 meters, and it's completely open to the southwest. So I'm really encouraged by the potential there because in my view, as a gold investor, a gold equity investor, what investors look for is obviously prudent allocation of capital, low AISC, potentially dividends, as well as maybe share buybacks, but also finding more, making new discoveries at operating mines. They could have a very positive impact on NAV. And we see that potential at the Valentine Gold Project.
Absolutely. And I think you don't want to produce only the next 5 years. It should be closer to 20.
Correct. Exactly what we're looking at, for sure.
Super. Ryan, thank you very much. Always a pleasure talking to you. And I think I have the right investment because that looks really fantastic, I would say.
In an environment where gold is very constructive and positive, I think that a lot of viewers have to look at gold now, or gold equities, because there is such a disconnect between the price of gold and gold equities.
Totally. Yeah.
Sprott had put out a piece not too long ago. It's almost as though gold is trading at $1,300 an ounce. That's the discount to gold equities. So, I appreciate you being a supporter. We're keeping our heads down, grinding away, delivering on expectations, and we will continue to do so. So thanks, and I look forward to future interviews.
Absolutely, that's how we do it. And also thanks to you, because it's not normal. You have always delivered what you promised. That's also not normal. Thank you very much for that.
Of course, we'll keep trying to do that.
Yeah, super. Please keep not only trying, do it.
We will do it. We will do it. Yes, indeed.
Thank you very much, Ryan. All the best.
Thank you.
Yeah, ladies and gentlemen, that was Ryan King from Calibre Mining. You heard it. Everything is in extremely good shape, and 60% of the NAV is now coming from North America in this company. And we look forward probably this year up to 300,000 ounces gold production, still at favorable AISC. And the company is making money, but also bringing the Valentine project into production. So for next year, already the ramp up first quarter, then commercial production, hopefully early in the second half of the year. And that's exactly what we want to see. It's growth, it's quality, it's margin. They make money, and also the debt situation is completely under control, because we talk about a $225 million line, but $100 million cash in the bank and constant cash flow coming into the company every month. And this makes it so worse. And honestly, the point of figure chart looks also fantastic. We have a price target of 275 to 3 Canadian dollars, definitely, probably already for this year. So really check out the company. I'm a shareholder. You should be too. Thanks for watching us. Bye-bye from Toronto, from PDAC 2024.